The current live stock price for Lithium Americas Corp., trading under the ticker LAC on the New York Stock Exchange, is $5.72, showing a sharp intraday jump of 1.15% as of 11:55 a.m. EST on Monday, May 11, 2026. This upward momentum follows a period of intense accumulation and strategic board restructuring that has caught the attention of institutional players across the board. While the broader market might see a speculative mining play, the reality behind this movement is far more complex. We are looking at a company that is effectively transitioning from a development stage explorer into a critical pillar of the North American energy supply chain, backed by the full weight of the U.S. government and major automotive players. This price action isn't just a random fluctuation, it represents a fundamental repricing of the risk associated with the Thacker Pass project as construction milestones begin to hit the tape. You might hear a lot of chatter on popular investing sites about the inherent volatility of lithium or the risks of pre-revenue mining stocks, but that narrative is quickly hitting a wall of institutional reality. The expectation among retail traders often centers on the spot price of lithium carbonate, which has seen its fair share of turbulence. However, the reality is that Lithium Americas is being built to exist outside of those standard market cycles. When you look at the recent $2.26 billion loan from the U.S. Department of Energy, restructured just last October to include a direct 5% equity stake from the government, it becomes clear that this is no longer just a private enterprise, it is a strategic national asset. This level of state involvement provides a floor for the stock that most of its peers in the sector simply do not have. If you are using tools like the Fidelity mobile app or managing an individual brokerage account, you've likely noticed that LAC has outperformed many of its peers over the last month, climbing over 36%. This surge is largely driven by the expectation that the upcoming earnings report on May 14th will provide much-needed clarity on the construction timeline for Thacker Pass. But the real insight here isn't just about the date of the first production, it's about the massive de-risking that occurred with the appointment of Clayton Walker to the board just last week. Bringing in a former Rio Tinto executive with a deep background in large-scale project development suggests that the company is moving past the permitting and paperwork phase into the heavy engineering and execution phase. This shift in leadership is a major signal to long-term investors who prioritize operational excellence over speculative hype. Expectations often lead investors to focus on the net losses, which widened to over $86 million in the last fiscal year. But the reality is that for a project of this scale, spending is the leading indicator of progress. The increase in operating expenses reflects a massive ramp-up in hiring and professional fees necessary to stay on track for the 2027 full production target. For those using SoFi Invest or Robinhood stock trading to build a position, understanding this burn-to-build ratio is essential. You aren't buying a company that sells lithium today. You are buying the largest known measured lithium resource in the United States. While the market gets distracted by quarterly earnings misses, smart money is looking at the $905 million in cash and restricted cash sitting on the balance sheet, ensuring that the lights stay on and the shovels keep moving throughout this capital-intensive period. The story of Lithium Americas is frequently framed as a gamble on the EV market, but the reality is that the company has already secured its primary customer. General Motors has not only invested nearly $1 billion into the project, but has entered into a joint venture that gives them exclusive access to the first phase of production. This effectively eliminates the demand risk that plagues so many other junior miners. Whether you are trading through Interactive Brokers or checking your Schwab Intelligent portfolios, it is important to realize that LAC is operating with a guaranteed offtake agreement. This means that as soon as that lithium carbonate starts coming out of the ground in Nevada, it already has a home. This level of certainty is rare in the materials sector and is a primary reason why institutional activity has remained so robust despite the lack of immediate revenue. The common ground here is that everyone knows lithium is essential for the future of transportation, but the deeper take is that not all lithium is created equal. The Thacker Pass project is unique because it focuses on onshoring the entire supply chain. By validating their flowsheet at the Technical Center in Reno, they are proving they can produce battery-quality material right here in the States. This is a massive geopolitical advantage that forces the market to rethink LAC's valuation compared to international competitors. If you are looking for investment help or exploring various investing sites to find the best materials play, the focus should be on this domestic independence. I want to hear from you in the community. Comment below how many shares of Lithium Americas you currently hold, or if you think the recent government stake in the project makes it a safer long-term bet. Engaging with these developments is how we stay ahead of the narrative. The movement we are seeing today is just the beginning of a larger shift as the market starts to realize that the pre-revenue tag is a temporary state for a company with this much backing. Whether you use Fidelity ETFs or prefer self-investing through various platforms, the data suggests that the gap between what people expect from LAC and the reality of its strategic importance is where the real opportunity lies. When we look at the actual business model, it is a straightforward play on massive scale and vertical integration. They aren't just digging a hole, they are building a chemical processing facility that is expected to churn out 40,000 tons of lithium carbonate annually in its first phase. This is why the US government is so involved. To have that kind of capacity on American soil is a game of national security.
Past performance figures from 2024 and 2025 show the expected losses of a company in heavy construction, but the total assets have crossed the billion-dollar mark, showing the tangible value being built into the Nevada desert. For those holding LAC in a Fidelity IRA or a SoFi active investing account, these asset-backed metrics provide much more insight than a simple PE ratio, which currently doesn't even exist for a development stage firm. Looking toward the future, the catalysts are clear. We have the May 14th earnings call, which will likely highlight the progress of the $2.23 billion DOE loan drawdowns. Any positive update on the construction milestones at Thacker Pass will act as a major tailwind. The risk, of course, remains in execution. Building a mine of this size is never easy, and any delays in the 2026 or 2027 production targets could cause short-term pain. However, the reality of the GM partnership and the government's 5% equity stake suggests that the project is too big to fail in the eyes of the current administration. This creates a fascinating tension for those using online investment tools. Do you follow the volatility of the lithium price, or do you follow the massive capital commitment of the world's largest institutions? The contrast between the speculative narrative and the industrial reality is what keeps the stock at the center of the conversation. Most people are waiting for the perfect time to enter, but the reality is that the major de-risking events, the permits, the funding, and the strategic partnerships are already in the rearview mirror. What remains is the hard work of engineering and construction. If you are managing your own individual brokerage or using the Fidelity trading platform, pay close attention to the institutional holdings. When groups like Orion Resource Partners and large ETFs start increasing their stakes, it's a sign that the reality of the project's value is finally beginning to outweigh the expectations of its critics. In summary, Lithium Americas Corp is currently trading at a live price that reflects a market slowly waking up to its true potential. We started with the expectation that this was just another volatile mining stock, but the reality we discovered is a government-backed, GM-partnered powerhouse that is onshoring the future of American energy. The intraday movement today is a small reflection of that larger transition. As construction continues and we head into the next phase of the 2026 timeline, the gap between those who see a pre-revenue miner and those who see a national strategic asset will only continue to widen. This is a story of expectation versus reality in its purest form, and for the patient investor, that reality is looking increasingly solid. Be sure to stay tuned for the May 14th update, as that will likely be the next major turning point for the stock's trajectory this year. Maintaining focus on these core developments is the best way to navigate the noise found on most investing sites and ensure your portfolio is positioned for the long-term shift in the global energy landscape. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.